Let's start with your word of the day. And again, let's keep in mind the S&P very close to a new all-time high.
Yeah, it's intermission. It feels like we just basically rode the roller coaster straight down and then straight back up with a whole lot of events in between. But if you went to sleep on, January 1st and you woke up today, you wouldn't have known anything happened. And I think that we're sort of in the middle right now, evaluating what happened after the Iran strikes and figuring out what is going to happen, not only with the big, beautiful bill, but also with tariffs. So I think that there's still a lot of unknowns and a lot of uncertainty, and we remain concerned about inflation, as does the rest of the market, although it has yet to really start to make its way into pricing.
So you're mentioning inflation as a possible risk to the market. Also, a lot of the uncertainty. There's uncertainty in the Middle East. There's also uncertainty about trade overall. Right now, we're in the middle of a couple of tariff pauses, but we don't really know how those are all going to work out. Yet gold hasn't really performed as you may expect. We've actually saw it lower in a couple of days. And your pick for us today is in the gold space, Barrick Gold. Why is this a good buy right now when we don't really see people running to the safe haven? We see people running to the equity market.
So, Barrick Mining, it quite frankly has its own fundamentals. But if you look at its performance this year, it has, without a doubt, had, a tremendous run. It's up almost 30%. In U.S. dollar terms, I think it's probably up a little more than that. And, the demand for gold will likely continue. And so a proxy for that in the equity space is a miner like Barrick Mining. But, the broader story here is also that this is a company that has been beaten down actually for a while. It is very well priced, while the rest of the S&P 500 is not. And if you think about where we are and what happens with tariffs, margins are not exactly, back to normal. We're just recovering, still under long-term averages for margins. And so any hit to commodity prices is going to be tough to pass through, to investors. And so you're either going to have equities get hit and valuations kind of come under pressure. So I think a cheaper part of the market is going to be more attractive later in the year. Combine that with the fact that we will be concerned about inflation, I do actually think that this sets up for a good positioning for the rest of the year.